Is this, first of all, I'm just going to ask one macro question to start, Lee. Okay. Is this a good thing for retail investors to be able to access private investments in their 401k plans?
Potentially, right? And so I hedge the answer only in that if we're talking about it being in target date funds or target risk funds, then absolutely, I think it's a good thing for investors. But on a standalone basis, that would give me reason for concern.
Why on target date funds versus just regular type investments? Does it have anything to do with this idea that for many of these private investments, they often take a long time for their investment theses to play out?
That is absolutely a part of it. You know, if we dig into private investments of all sorts and start having conversations about, the J curve and what version of a particular investment it is, it gets incredibly complicated. And I think for most consumers, when I have these conversations with our individual clients, it takes a lot of time to kind of explain some of these concepts and make sure that those types of investments are right for individuals. Now, if we take the idea of BlackRock or some of the others that will surely get in on the party, they're going to go through this process and allocate a small portion of those funds to the target date funds. So everybody's accustomed to the target date funds and the target risk funds now. And so if we're looking at something where there's 5, 10, 15, 20% even in a target date, I think that could be appropriate for a lot of consumers. But what it does is it takes the responsibility off the shoulders of the consumer for doing the due diligence as to whether or not that particular fund, be it private equity, cryptocurrency, private real estate, those sorts of things, it takes the due diligence aspects off the shoulders of the consumer.
But, by doing that, Lee, it's always there is no free lunch, right? There's no free lunch. So if you are taking that work, the due diligence and everything else that could be a pitfall away from some of those future retirees, you pay for it in some way, and cost is going to be a big factor for these discussions going forward. Just What are you looking for with regard to the costs associated possibly with putting these types of private investments in these funds?
Absolutely. As somebody, and for full disclosure, we manage some 401k clients, some funds for a number of clients here in the metro Atlanta area. Some of the things that we look at is going through all of the funds, what types of funds are available, be that your traditional fixed income or large cap equity funds, domestic, international, and otherwise. You've got to go through that process and make sure that those funds are priced appropriately for that particular asset class. So a lot of responsibility, just like in 401k plans. Now, that responsibility is going to be borne by the advisor, but ultimately the employer, who is often the fiduciary. So it's their responsibility. They offload some of their responsibility to people like me to help with investment selection. But it's incredibly important that we take our time, just as we would any other sort of fund, and say, hey, BlackRock, I like what you're saying, but let me dig down so that I can look at the details, make sure that we understand liquidity risk and how that may play out in this particular fund, in addition to things like expenses.